right, everyone's here for their Bitcoin tea leaves, right? We're going to read the tea leaves and see what's going on. So yes, for those who don't know, I'm James Check. So what we're going to be covering today is a bit of a whirlwind tour of just some of the very big numbers that describe Bitcoin in its current state, and really the success that, I mean, it is an amazing story. It's kind of, I mean, it has come from nothing, and now it's become a very meaningful part of the financial system, right? And will only increasingly do so. So some of the things we're going to talk about is, we'll start with market performance, but that really leads into the road to overtaking gold. And there's a number of metrics and data points that are saying that if you're a gold bug, you may not be for very long, because I think Bitcoin is probably a better decision at this point. We'll look at things from the perspective of adoption and hodlers, so really everybody in this room, right? How investor behavior and how people actually hold this asset and why they hold the asset. And then we'll close out with a couple of interesting metrics on mining and the energy market. So I want to start off with some questions just to kind of get people thinking along the lines of what we're going through today. So is Bitcoin outperforming the Australian real estate market since 2020? How large are the Bitcoin ETFs relative to the gold ETFs? And we're only talking about a couple of months of trading. How many ounces of gold exist per Bitcoin? How many Bitcoin networks is the US government currently adding to its debt every single year? And which network settles more daily value, Bitcoin or Fedwire? So just some questions. We'll go through these one by one, and we'll see if you kind of have some of these ideas in your mind when we get there. So impressively, Bitcoin is now the 9th largest asset in the world, right? We look at everything. It's surpassed really only by tech stocks, by gold, and by poor old shitcoin silver. Now, it is now bigger than some of the biggest banks in the world, the JP Morgans. It's bigger than Berkshire Hathaway. It's bigger than some of these extraordinarily large businesses, that many of which have been around for many, many decades. So for something that's really chosen by the market, a piece of open source software, it really is quite remarkable the scale that it has got to. And sorry, just to close on that, let's just also observe the 10x multiple to gold, right? So just getting there, we'll talk about the path where it currently is to gold, but that just gives you a bit of perspective. Now, Bitcoin's also the best performing asset on pretty much every single time frame. So if we look at from just a raw return on investment, and we can use a classic 4-year cycle, but you can really look at any period of time. We're up over 1,200%. And again, this depends what day you want to actually measure and take the screen grab. But we're not talking about things that are too far from that mark. On a 4-year compound annual growth basis, it's 90%. Now, at the bottom of the bear market in 2022, that was closer to about 45%. Very few assets return something like 45% on a compound annual growth rate. So even with the tremendous drawdowns that Bitcoin has, it still has a long-term performance, which is just kind of blitzing everything else. If we put our TradFi hat on, we can look at this via the argument is that it has big drawdowns, it's too volatile. Well, let's put it into their world. So this here is the Sortino ratio. You may have heard of the Sharpe ratio, but the Sharpe ratio penalizes any volatility. But we kind of want upside volatility, right? That's the right kind of volatility. So what the Sortino ratio does is it removes. It only looks at downside. So we're only looking at how much is the return profile of Bitcoin and other assets relative to its downside volatility. So orange is the Bitcoin Sortino ratio, and that smear of color down the bottom is pretty much all of your other indexes, whether it's stocks, whether it's bonds, whether it's the dollar, whether it's oil, gold. So as you can see, for its entire history, it continues to essentially blitz everything within the TradFi way of measuring these things, risk adjusted. Now, I think this one's going to hit quite close to home. This is one of my favorite slides. The average Australian home, now this is across all states, you can do it obviously by state, but the average Australian home has increased by 36% when measured in Australian dollars since 2020. So the average home, and this is everything, houses, flats, the whole lot, is about 933,000. In Bitcoin terms, and by the way, this is as of December, right? So this doesn't include the rally that we've seen this year. Those houses are actually down 75% in Bitcoin terms. So for people who are trying to get onto the housing ladder, myself included, holding Bitcoin is just vastly, vastly superior to trying to save in cash. If you're saving cash, you need to earn 36% more over the last 4 years. And very few people are getting a 36% pay rise over that period of time. So in order to just stay on the hamster wheel, right, you have to earn more in AUD. But in terms of Bitcoin, you're essentially running much faster than the deposit and the house value itself. And with that same logic, Bitcoin's actually repricing everything. So all of these traces are all the other assets, dollars, oil, bonds, gold, priced in Bitcoin, and they are all now at all-time lows relative to Bitcoin. So, it depends what you want to buy, but if we're talking about purchasing power, this is really showing that pretty much on every time frame, Bitcoin is giving you a superior purchasing power. You can buy more energy. You can buy more bonds if you really wanted to do that. Good luck with that. You can buy more gold. So it really is improving people's purchasing power and giving people optionality. So the road to overtaking gold. Now, the reason I want to focus on gold is because it's the most clear-cut asset that we're competing with. Now, ultimately, Bitcoin is going to reprice all of these assets. It's going to pull in the monetary premium from most asset classes. Gold just happens to be the first on the chopping board in terms of the easiest one for us to kind of make analogs to. People say digital gold. And if we look at things, gold has a few different use cases, right? Bitcoin has one use case, not dying. That's essentially what Bitcoin does. For gold, people use it in dentistry. People use it in jewelry. About 50% of all gold goes into jewelry. But if we look at the investment grade gold, this is gold that sits in central bank vaults, in bars and bullion and coins and ETFs, right? This is the gold that is there to be purchased as an investment vehicle rather than jewelry or some other industrial use case. Well, Bitcoin's market cap of 1.3 trillion is already 20% of that investment grade size. So in terms of, it's not going to overtake gold, it's actually not doing too bad at climbing the ranks in terms of the overall investment grade sound money, because Bitcoin is arguably 100% investment grade sound money. Now, these two bar charts is the ETFs. So now we have to be fair, and you'll see that the Bitcoin ETF, I've got 4 years here because technically Grayscale has been trading before this recent couple of months. But GBTC vacuumed up about 650,000 Bitcoin in about 3 months back in 2021. But if we include all of GBTC and these different striations, GLD, different ETFs, GBTC, IBIT, Bitcoin is already 60% of the size of the biggest gold ETFs. So we are already at a pretty meaningful size relative to essentially the first on the chopping block. And again, we're 10 times smaller than gold, but we're talking about 60% of size. And the inflows really do continue at this point. If we look in terms of trade volume, so if you take all the trade volume for Bitcoin and ETF and gold ETFs, 75 cents out of every one of those dollars is trading the Bitcoin ETFs, not the gold ETFs. Again, this is obviously during the initial phase, right? We will see where this settles out over time. But I think that the demand that we've seen for these Bitcoin ETFs it certainly blew me away, probably by an order of magnitude. I was expecting tens of millions, not hundreds of millions a day, not billions in a day. So there is a market appetite for it, right? It's now an asset that people can't ignore because trading almost $8 billion a day is a non-trivial sum. And I think we probably all know that in a matter of weeks, actually, we have the next halving coming along. So not only have we got financial metrics that are outperforming, not only is gold, kind of getting a little bit smaller relative to Bitcoin despite market cap, but the scarcity factor is also in play. So the current issuance rate, and in the red and orange, is for Bitcoin and gold, their inflation rate or the issuance rate, however you want to frame it. And then in the blue and green is the inverse of that, which is the stock to flow ratio. Now, the right way to think about the stock to flow ratio is it's how many years at the current rate of production would it take to produce the existing supply, right? So if it's for gold, it's currently at 44. If we kept mining gold at the current rate, it would take 44 years to reproduce the supply that we currently have. For Bitcoin, it's currently 60. We don't have 60 years at the current inflation rate because in the next 4 weeks, it's actually going to drop down to half of that. And then it's going to tell you that you need 120 years to get to the supply. But we don't have 120 years. You've got 4 years. And that will continue to double. This is the concept of the absolute scarcity. So really, why is there the excitement into the ETFs? Why is this money flowing into Bitcoin and not into gold? It's essentially because people are starting to understand that this is, in fact, the scarcest asset that exists. It is absolute scarcity. And a big difference with gold, you can see that its inflation rate hovers around 2.3%, thereabouts, and it's pretty constant over time. If gold goes to $10,000, you better believe they're going to find ores that they couldn't mine at $3,000 or $5,000 that they will be able to mine at $10,000. So the more that the gold price goes up, the more gold will be produced, which is why that inflation rate is pretty static. Bitcoin is very different. No matter what the price is, we cannot produce more of it faster because of that beautiful elegance of the difficulty adjustment, which keeps everything, the more that you fight over it, the harder it is to find it. And people often ask me what my price prediction is. And if you follow my work, I don't really give them. This is about as close as it gets. If we're going to overtake gold, how much gold is there per Bitcoin, right? There's only 21 million Bitcoin. There's 21.2 million 10-kilogram gold bars. So if we look at that in terms of a ratio, how much gold do you get per Bitcoin if you just do a like for like? 347 ounces, which is about 1.14 million Aussie dollars. So that's my price target, right? At the very least, we should be overtaking gold. And if we're talking about that, I mean, 10.8 kilos is a pretty hefty gold bar, right? That's not bad. So moving on to look at the hodlers and rates of adoption and metrics that really tell us about the story of us. And I think this is what fascinates me so much about on-chain data. It's us. It's all the decisions that we make. It's, I look at myself back in 2019. I was buying Bitcoin because I had concerns about the fiat system. The debt didn't make sense. It's like, who's going to pay this back? It's probably going to be me and my kids, but none of us are going to earn enough to pay this back. And you start realizing that something's wrong. So all of my decisions that I expressed via buying Bitcoin are in those transactions, right? They're a small footprint, but there's obviously quite a few of us, and this pool is growing. So the story that gets told inside the Bitcoin ledger is really what on-chain data is all about. It's about, what are the people doing? What is the sentiment? What are the investors thinking? What are we doing? So I think this is my favorite slide from this whole thing. Why are people buying Bitcoin? Well, the US debt, and actually, this slide is actually out of date because they literally passed a $1.2 trillion bill this morning. So it actually is 35.2 trillion is the total US debt pile. Obviously, every country has their own version of this nasty looking green line. And they've added $10.8 trillion since 2020. Now, that's about 146 million Bitcoin. Well, there's not exactly 146 million Bitcoin. And you need 23.6 entire Bitcoin supplies to pay off the debt as it stands today. So, if we multiply that by 23.6, then we'll be able to pay off the debt with Bitcoin. And the orange chart is how much the debt is increasing on an annual run rate. And obviously it moves around with the price. But if we just take over the last couple of years, they're adding about 35 million to 100 million Bitcoin per year in debt to the pile. And the question came at the Sydney meetup the other day saying, well, there's only 19.65 million Bitcoin. And my response is, yes, what's that going to do with the price? Because this is printed money that has to come into the system, and there's a lot more of it. If you look longer term, there's hundreds of trillions of unfunded liabilities. So this green line is essentially pre-programmed to go up, and Bitcoin is pre-programmed to essentially hit that supply limit, and you kind of balance these two things off against each other, and it's a pretty nice looking picture. So this is looking at the total number of addresses, right? Now, I've filtered this to only look at $100, so you can filter out a lot of like the small dust transactions and things like that. There's about 24.2 million addresses holding at least $100. Now, as we probably all know, many of us would have multiple addresses. So the total number of Bitcoiners out there, and when people say that we're still early, that's why we're still early. There's a lot more than 24.2 million people in the world. And 24.2 is including a lot of duplicates, right? Many of us would have tens, 20, 50, 100 of addresses. So when you actually reduce this down, we're talking about a very, very small amount of people who actually hold self-custody Bitcoin. Now, again, there's lots of things like exchanges, and they've got customers, and there's all those different nuances. But to give you a bit of a sense of scale, we're not talking about a very, very large pool of people. This is very, very early in this process, right? And number go up is generally the thing that brings people in. Now, the direct question I get quite often is, well, if you've got all these wallets, and that doesn't mean that Bitcoin is highly concentrated in terms of its supply. Well, we did a very detailed study to actually try and answer this question. How much is Bitcoin supply actually concentrated? Put some numbers to it, try and understand the mechanics. Some of the big picture takeaways. So the top chart there is looking at the actual supply distribution between, we give them sea creature names, shrimp, crabs, all the way up to whales. So the darker colors are very large holders. And the lighter colors and the green colors are smaller wallets. Now, the bottom chart is how many they are, right? There's obviously a lot more small holders by count, but they hold less of the supply. And there's a few whales, and they hold a much larger chunk of the supply on a relative basis. But what we've seen is that really since 2018 was a bit of a turning point in Bitcoin's history, where in the early days, it was mostly the miners. Miners had the most amount of coins. They were the primary place that coins would go from miners into circulation and eventually find a hodler. But since 2018, we've actually seen a very long-running trend now, which is that whales have been, by and large, and these are very, very early holders, people from the early days of Bitcoin, right? They accumulated 1,000 Bitcoin for prices that we all wish that we could. and they've been distributing very, very carefully over time, right? So strangely enough, Bitcoin supply is actually getting increasingly distributed, not less so. We've seen more and more of the supply held by people with less than 100 Bitcoin now represent more than 50% of the supply. This is relatively new. And you can see the red arrow in that top chart. The other component that's come into this is exchanges. So exchanges really grew up through the 2015, 16, 17 run. That's when they really hit their apex of supply. 2020 was really where they peaked in supply. But the education of Bitcoiners to take self-custody has really resulted in a great many coins getting pulled off exchanges. We're also seeing things like multi-sig for institutions. So a lot of the coins that we see come out of exchanges, particularly Coinbase, are actually going into some kind of institutional multi-sig. And we're talking about millions of coins going into this thing. So, and this has been going on for a very long time. So the institutions and these very, very large players, they still require custodians because of regulatory reasons. But we are seeing, by and large, that the Bitcoin supply is actually distributing over time, not getting more concentrated. And the hodlers keep on hodling. So if we look at the amount of coins that have not moved in at least 6 months, now a lot has happened in the last 4 years. We've had 3 new all-time highs. We've had a 75% drawdown. We've had FTX and the ETFs, and yet 66% of that supply just isn't transacting. And I quite often, when I'm doing my analysis, if I can't quite get a good read on it, I ask myself, can I see myself in the data? And that's actually a really good tool because most of us understand orders of magnitude more than people from TradFi, right? Having spent time in this industry, coming to these conferences and learning about the asset, most of us are far further ahead than where any of the TradFi counterparts are. And I can see myself in this data, right? I accumulate during the bear markets. That old supply goes into my wallet and just stays there and does nothing. And then only as the bull market comes in, you don't actually sell it, but you certainly think about it, right? The higher that the price goes, the more you start thinking, oh, this is kind of life-changing. But a lot of the hodlers, they're not here for changing a year. They're here for changing their life and their family's life. So these long-term plays, right? We're talking about a lot of the supply that hasn't moved for a long time. And actually, we did a study last year. So probably one of the best things I released last year was a new framework called Coin Time Economics. I won't go into the details because even I get bored by it. The point is we did a bit of an estimate to find how many lost coins there are. And we found you can never perfectly estimate it because let's say you withdrew your coin today and immediately lost your key. You don't really know. I mean, the market doesn't know they're lost. You know they're lost. It's pretty unfortunate, but the market doesn't know. But if they don't move for 5 years, 10 years, 12 years, the longer they stay dormant, the more likely they are to be lost. So we built a very elegant framework, very simple mathematical framework that kind of calculates that grading curve, how much of the supply isn't moving on a time basis. And from that, we estimate that something between about 3.8 and 4.2 million coins are lost. So that's a non-trivial amount, right? That leaves us with what, 17 or 16 something million. So it's a non-trivial sum. So this chart, I've covered this in a couple of presentations before. This, I think, is the success of Bitcoin education. And something that I took away from last cycle is that the shrimp are actually the smart money. They're actually really important to pay attention to. Yes, they may not hold as much, but if you can see in 2017, what this is looking at, by the way, in the blue is the amount of coins coming into circulation each year, so the issuance. Those colored areas is taking all the wallets with under 100 Bitcoin and just saying, well, how much are they accumulating relative to that issuance rate, right? So it's just a nice benchmark to kind of visualize things. And you can see there was a huge amount of buy side into the 2017 peak. Lots of people bought the top, that was me. And that's the inexperienced shrimp, right? The inexperienced young guys. In 2017, we didn't have the same conviction. There weren't as many podcasts. Bitcoin education wasn't anywhere close to where it's been. So my personal experience has been going through all of that price action and learning a lot. I don't know how many Bitcoin podcasts I listen to a week, but it's a lot. And then you see we get to 2022 and prices at $20,000 again, except this time in a horrific bear market. You've got every man and his dog getting unwound and there's leverage imploding everywhere. And the narrative was Bitcoin is dead for a decade. And these crazy folks stepped in and bought the dip like they've never bought it before. So it's telling you what the smart money is doing. The smart money is actually us. And that's why I'm saying you can actually see the success of Bitcoin's education to step in at 20 grand, not in a raging bull market, but at the arse end of a bear, right? It's a completely different sentiment and you need to have serious conviction to do that. And this is the realized cap. You may hear me talk about the realized cap because it's the most important metric in all of on-chain data. It's the on-chain market cap. So the orange in the background there, what it captures is every coin priced at the time when it last moved. Now, why is this important? Because if you buy a coin at $10,000 and you sell it to someone at $50,000, someone else has to come in with that $40,000 delta times the coin volume to buy it off you. It's a capital inflow. Money has to come in higher than the original purchase price. So if we, it's actually punched to a new all-time high this year, recently, 526 billion. So you can also think about this as the amount of money that's been saved in Bitcoin, because those UTXOs that you have from 2018 or 2019 or 2020, they are saved at the price when you bought them. So that's the capital that you saved in Bitcoin. Until you spend it, it's going to remain priced at that level. So we actually have $526 billion of capital that's been saved in Bitcoin. This is the real market cap. It's not about the price, because the price can move around all over the place. You can also see it's much slower, much steadier. This is the real capital invested in Bitcoin. And you can also see it goes through very, very steep repricings during bull markets. So in 2021, we had $60 billion a month flowing into Bitcoin, and we've actually blown that out recently, which is 70.8, and I believe that's actually higher as of today. So I mean, $70.8 billion is flowing into this asset right now on a monthly basis. So just closing out, Bitcoin's got a lot of properties, a lot of things it does, but one of them is settling value. So, you know, it's not a perfect estimate, but if we look at the amounts, that when we look at transaction volumes, any kind of economic activity with Bitcoin, it's very important to filter it. So in the light orange there, that's just unfiltered volume. That's how many UTXOs Bitcoin creates and destroys every single day, right? That is about a 10x overestimate of what's really economical, because you don't really care that Binance shuffled a bunch of wallets internally. You don't really care that Coinbase turned one cold into a hot. No, it's not. It's useful, but it's not really that important. So the darker orange is that economically filtered transaction volume. So that's really the right thing to compare against these things. Now, we also know it's not right to compare Bitcoin at the base layer to Visa, because Visa's layer 6, whereas Bitcoin's layer 1. But nevertheless, on a total unadjusted basis, Bitcoin currently settles $280 billion a day, which is more than the S&P 500 trade volume. So these are non-trivial numbers. And by the way, that happens over the weekends too. So if you actually sum it up, and I forget the actual statistic, but because Bitcoin trades 24 hours a day, if you compare that to an asset that can only trade during business hours, Bitcoin's been trading since 1957, I think, or 1954 in terms of an equivalent stock in terms of maturity. So we have more trading hours than businesses that were formed in 1950s. Now, this is the answer to that last question. We don't currently settle more than FedWire, which is $4.5 trillion a day, but we are getting up towards the upper end of it, right? So another 10x, and we may well be there. So when it comes to a monetary premium, we talked about this actually in the earlier panel. What is Bitcoin's monetary premium? I would argue that it's almost entirely monetary premium, but what's your anchoring point relative to what? The red line is what we call the thermocap, and that is every single coin issued to miners plus their fees. So essentially, how much capital has been paid to the industrial base of Bitcoin cumulative over its entire lifespan. So in other words, that orange line there, which is $61 billion, that is how much it costs to build the current supply. That is the cost that was paid to miners, what we paid essentially. How much is Bitcoin trading above that level? Well, you can see during bear markets, we actually tagged it during the first bear market. We returned to its cost of production. In the second bear market in 2015, we were 3x higher. So even at the worst phase of the bear, we had a 3 times monetary premium over its production cost. In the bottom of 2018, it was 5x. At 2022, it was 7x. So you can see each year, we're actually adding this base level monetary premium that keeps coming into the asset. Now, the other thing, I think it's actually quite interesting. I mean, the amount look at what Bitcoin has done for the world. I don't see too many conferences for FedEx. I don't see too many conferences about Westpac. I don't see too many about, Coinbase maybe. But you can see that we're on the scale of a mail business. That's how much it's cost to build this tremendous asset that's now number 9 in the world. It's going to cost us the same as Westpac, right? One bank. And just to really highlight on the energy sector, this is the last slide. We currently have 600 exahash of hash power per second. That's equivalent to 8 billion people solving 75 billion SHA-256 hashes every single second, nonstop, every day, all day. It's an extraordinary number. The world of Bitcoin is just gargantuanly big numbers. And interestingly, because of all the ways that Bitcoin integrates with grids, and it actually improves load balancing and these various other things, you actually see the hash rate change when Texas has a strong weather event. when lots of people need to use their electricity for air conditioning during a storm or for any reason, if there's weird events in Texas in weather, you actually see the Bitcoin hash rate slow down because about 30% of miners are in America now. So it just shows you how significant it is, where you can actually see the Texan weather events in the hash rate. So just some questions to close, and then we've got about 5 minutes, so we can do some questions and see if anyone's got any of those. Is Bitcoin outperforming Australian real estate? Yeah, by about 4x. You can buy 4 times more houses today relative to 2020 if you had to hold Bitcoin versus a house. Now, obviously, you can't live in a Bitcoin, but eventually maybe. How large are the Bitcoin ETFs relative to gold? Well, they're 60%. I mean, and that's in, yes, 4 years, but 2 months, right? What does it look like in 2 years? What's it look like in 20 years? How many ounces of gold exist per Bitcoin? 347 ounces, which is equivalent to 1.14 million. How many Bitcoin networks is the US government adding to its debt per year? 2 to 5 entire Bitcoin networks. So, tremendous numbers. There isn't enough Bitcoin to pay off the debt, not at these prices anyway. And which network settles more? Unfortunately, it's still FedWire, but we'll see. We'll get there. So that's it. So hopefully that's a bit of a whirlwind tour of some of the big numbers. We've got about 5 minutes. If you've got any questions, I'm happy to go around the room and pick any up. Tough crowd. Go. Good question. So essentially, only when it receives coins. So once the mempool sees that there is a transaction going to an address, and actually I've been asked a question before, if you generate a wallet in your Bitcoin wallet, that address, no one knows about it except you. So that doesn't exist to anybody else until a coin or a UTXO gets spent to it. Yes, you can. So you can actually look at, and that's something that we're working on at the moment, is looking at how you can actually look at multi-sig wallets, because very few average people are kind of spinning up a multi-sig every couple of days. Institutional clients do it a lot. So it's actually a really useful heuristic to try and identify the institutional side, how many of these guys are coming into Coinbase custody and things like that. Not only whales, but everybody starts to sell towards market peaks. So we look at long-term holder supply. It's just a nice framework. Coins older than 5 months. They're the ones that are statistically the most likely to remain unspent. And so there's 2 types of long-term holders, actually. There's the ones who are probably sitting in this room where you generally have a bit more of a market feel. You step in, you buy the lows, and some of you will take some chips off the table as the market goes higher. Whales do this as well, but it actually happens across all wallets. There's another group of long-term holders who probably also was all of us at one point, and we wrote a report on this called Buying High and Selling Low. And it's these poor buggers who come in at the absolute top, they buy, they hold it all the way to the bottom, and they sell everything at the bottom. Happens every cycle, time after time. We can see them do it. So we call them the single cycle long-term holders, because they have to learn that tuition before they become the second form. So it's a bit of a graduation process. Good question. So the question is, how do you know if someone's spending a coin versus selling it or a consolidation or something like that? That's why in that economically, when we look at transaction volumes and things like that, you can actually filter for it. So whenever you hear the term entity adjustment or adjustment, that's what we're doing. We're saying, well, this is actually a consolidation, so we're not going to consider that to be spent per se. It's also an imperfect science, as all data and markets especially is. We assume that's why you'll hear me say they spent, not sold, because I don't know that they're sold. But in the same way, I get this feedback quite a bit. When we look at bear market bottoms and you see everybody capitulating, without fail, there's like 3 guys in the comments being like, nah, bro, it's tax loss harvesting. And my response is, well, do you tax loss harvest in a raging bull? Not really. You probably do it near the bottom of a bear. So the behavior patterns come out at certain times. So you can tell with certain adjustments. In many instances, the error bars on an individual can be large, but the error bars in aggregate are typically relatively small. My favorite learning, good question. To be honest, it's just how organic Bitcoin is. So for example, in that CoinTape economics piece that we did, we found, so you may have heard the realized price. The realized price is the average cost basis for every coin, right? But the problem is that when you're calculating that metric, we consider Satoshi's lost coins. And they're never going to respond, right? If they're lost, or the early miners, they can't respond to the market conditions. So in a way, we're kind of penalizing, we're actually underestimating the cost basis. So think about it this way. At the bottom of the bear, Satoshi had 36 billion in unrealized profit. So to be at break even, some other poor bugger's holding 36 billion worth of unrealized losses, right? So, but we know Satoshi can't respond, but the other guy will. So as part of the coin time economics work, we actually found a new metric from first principles, which we call the true market mean. And we believe it is the cost basis for the market. It was at 32,000. I reckon if you go back to the previous cycle and you draw a horizontal line through the middle, you'll probably draw it somewhere around 30,000. That's where the average person bought their coins. So to answer your question, what do I find the most interesting? It has a long-term median of 1. It is in the middle. Mathematically, statistically, it is in the middle. And there's so many things like this with Bitcoin data that you're like, it's uncanny how reliable, how consistent, and how organic it is. And it's because it's all of us. I think that's it. That's time. Thank you very much.